Hey bookkeepers, it's Trudy at Maven, and holy crap, it's already October. I cannot believe it. The holidays are actually right around the corner. So, this is a sweet spot. It's far enough from year end to do some serious cleanup, but it's close enough that the work you do will actually pay off right now. If you ignore October, you'll end up squeezing double the work into December. Remember, year end isn't a date, it's a process. So, this is your lock it down month. Your goal in October is to clear as much as possible now so that November and December don't become uncontrollable. So this is your October checklist to move from I'm behind to I'm going to coast into this year end. But first, did you watch the September episode? I'm going to pin that here or down here or somewhere because I don't know how to do it, but I'll make sure that it's pinned on there because that also has a checklist that you're going to want to get your hands on. If you're set up for September and you're feeling confident, here's your October list. And let me preface that this is fitting for cash basis clients. We're not delving into things like accruals or inventory here. So cash basis. All right. Number one. Finalize your Q3 reconciliations. Every bank, credit card, loan, line of credit, overdraft protection. There's way more than bank accounts here. 2, double check your payroll setup for year end. Are there any bonuses? Will there be? Have there already been? Are there terminations to worry about? New hires? Adjust payroll changes that are big for next year now. Get ready. Pivot. 3, verify asset and corresponding loan entries. When you're reviewing purchases, make sure you ask your 2 questions. Does this item cost more than $2,500? That's per the IRS safe harbor, unless your firm has a different threshold. And will it be used in the business for more than 1 year? If the answer is yes to both of those, it should typically be capitalized instead of expensed. The smaller short-term items, go ahead and put them in the expenses. So post all asset purchases to the right accounts. That means there's no $5,000 copy machines sitting under office expenses. And this is a trick that I love to use. I set up my chart of accounts so that my CPAs can readily see what transpired each year. So if major assets were purchased in categories like buildings, vehicles, equipment, I start a new account with a heading such as vehicles purchased in 2025. And then each vehicle purchased that year is listed as a sub-account. That helps the CPA manage their depreciation schedule really quickly, and they're going to appreciate your effort. Number 4, identify tax-deductible opportunities. Now, I don't expect you to be able to necessarily point out tax-deductible opportunities. You're going to have to triangulate with the CPA. But this is that time of year when, if you've ever heard someone say, oh, I got to go buy a truck or a vehicle before the end of the year, it happens all the time. So you want to start triangulating conversations about what to anticipate. I've seen people run out literally the last week in December and try and orchestrate this, and it becomes a much bigger challenge than you can imagine. So get ahead of that now. Number 5, touch base with every client. Just send a quick year-end readiness email or make a quick call, drop them a text, set up an appointment. Make sure there's no surprises coming. The last thing you need to know in December is that back in May, they made a major purchase and forgot to let you know about it. Happens all the time. So make sure you reach out. Keeping those lines of communication open is key, because poor communications at year end or any other time of year will definitely cost you clients, and you can bank on that. I want to obviously take this time to toot our horn here at Maven, because Maven app tracks all of this year end stuff for you, what's pending, what needs input. You can see at a glance how close you are to closing each client. And lastly, number 6, send a copy of your client's electronic file, QuickBooks, whatever it is, unless your CPA already has access, in which case prompt them to take a look. Now's a good time of year for that CPA to get their eyes on what's in the account now so that they can look for major discrepancies or issues they may have. Tax planning that they've done with your client that you're unaware of. It's a great way to keep communication open and to be really proactive. So don't forget to send your CPA a copy of the file. They may want to see it again in November, which is fine, and then they might want to see it again in the beginning of December. Remember, year end is a process, not a date. And of course, I want to give you our Maven tip, which is this is exactly where the Maven app shines, because the status boards for each client show you what's done, what's not done, what still needs attention. So please make sure you follow us and watch for the app drop, because that's coming and it's going to be big. Now, your call to action next month, November, is going to be all about tying up loose ends. And we're going to cover exactly how to do that in the November special edition. So make sure you're subscribed and you've got the little notification bell so that you know when that episode drops. Lastly, make sure you print the checklist. That's down here in the description as well. So we're going to print the checklist out, go through it with each client. Same with September. There's a checklist with that one too. And I'm going to link the November episode right here for you as well somewhere. So make sure you click that next, and we will see you there.